Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is February 26, 2016, and today is Thursday morning. So looking at the economic calendar today, we have G20 meetings today, so that's going to affect all the major currencies, and that's throughout the whole day. So it's a little bit hard to say exactly where you're going to pinpoint where that's going to affect, but you should be able to, stay in tune with the news and see what's going on. And then at 3:30 South African time, USD GDP monthly numbers. It's preliminary numbers, so yeah, I don't see it much affecting the market at this stage, but let's see. Okay, so there's been some major run-ups this week and some major rotation in the markets. I'll start with the Dow Jones just because that's, I think, most timely. We had this big sell-off on Wednesday right here, and we touched on this support level, and we've had this line up 16,137 up for quite a while, and as soon as we touched it, we came right back up, and then the buying pressure continued going up, and this is just very reminiscent of a bear market. I mean, we're not sure exactly where we're holding. We think it's a bear market, and boom, it starts taking off, and that's exactly what's happening here. The markets are actually showing some healthy returns. So, some of those major stocks that are coming about are showing some very, very good returns. So the markets in the States are relatively strong. So, with what's going on with this sell-off, I would more attribute it to what's going on in China, what's going on internationally, some of the questionable situations around the world with the migration of the Syrians and, all that stuff that's going on around the world. So ultimately, the markets are still strong, okay, even though we've had this tremendous sell-off, and we're just trading here at 16,673 above this level of 16,600-ish level, which we've flirted with before, both on the support side and the resistance side. So if we can continue, I think we could hit 17,000, okay? So that is a major, major move this past week. We've had almost 500 points, okay, on the Dow Jones. So beautiful chart on the Dow Jones. Now that's going to obviously affect price of gold. Now gold hasn't retreated much here, okay? Even though the markets have gone up even higher, gold is staying steady at 1238. So it means to say that gold is getting much firmer, it's getting stronger, okay, relative to the market. So, that's something I'd like to also note. So, going into the next session, the next 3 months, I would expect gold to continue going up. So, these are just some of the pinpoint things that you can pop from the markets. They're not going to give it to you. So you're going to have to just, connect the dots and put it all together. So that's my call on gold based on what's going on with the Dow Jones. And we'll see if that remains to be true in 3 months from now. Looking at the USD CAD, we broke below this 137. I mean, this is just such a classic move. Okay, this is exactly a mirror image. The sell-off is exactly a mirror image of the run-up. So this seems like it's going to be a correction here. Okay, the question is how much farther we're going to go. So we can, so we can possibly go down to 134.40 is a resistance level, and then I would say 128.70. And on the upside, I would say 140-ish level is a resistance level. So, those are I'm going to draw those lines now. Let's see if they remain to be true. That's one support and resistance. You see that was a previous resistance, subsequent support. And then, at this level, I would say previous resistance, okay, we broke out of it. So I would say around 134.70, 134.80-ish level is a support level, okay, just, give or take 20 pips. Looking at the Euro USD, we're bouncing right off of our second support at 10.10. We're trading at 110.50, about 45 pips above. So we're staying. I love this chart because look, I mean, it's really being very honest to the technicals and being honest to the resistance and support levels. So if you're just able to just trade the support and resistance levels here, you'll be doing great. So, we had this previous support on 110, 111-ish, let's just say, and then we breached it. We came down to 110.15. We flirted around it, and then we even hit this third support level at 109.55, and then we just took off from there. So ultimately, we're about 100 pips from our third support level right here, and we're trading between this 110 and 111-ish number. So we're right smack in the middle. The question is where we're going to go from here. So like I said, as long as you're honoring the extremities, you could be making some very good money in the market. So, that's my call on the Dow Jones. GBP, Japanese yen, ultimately, bouncing a little bit here, as you can see, as we're hitting this 158, and I said that we would. Very difficult catching a falling knife, obviously. I mean, this just buying this and selling here is much less of a play than shorting it from 175 going down to 157. So the odds of you making money on the upside is much less. So in this type of situation, you're not looking to buy it, but looking where to cover your shorts, okay, at the end of the day, until it shows and proves to you that it's a long, okay? So this is definitely, something that has been a big sell-off, and I would expect some sort of a bounce here. And just remember, GBP, Japanese yen, has been trading a little bit in tandem with the Dow Jones, ironically, and it's broken that relationship somewhat because the Dow Jones just rallied this week about 500 points, and the GBP Japanese yen is, as you can see, dead in the water. So, it's suffice it to say that, we have to keep an eye on this to see if it goes further down, and this would be called relative weakness, okay, because I would expect it to continue trading in tandem with the Dow Jones. It hasn't, and it's shown some more weakness. So this is where you have a little bit of an edge on the market. Now, it's not foolproof, obviously, and this is why we always recommend that you put stop losses in your trades prior to actually entering the trade and knowing when you're going to get out so you can protect yourself. But, ultimately, that's what I would recommend. Right here, we're looking at oil at $33 a barrel, closer to the upper range here at closer to 33, but it has been a seesaw situation right here, and it looks like it's, setting up a new resistance line, as we can see here. Let's just pan it out right here on the top, right here on the bottom, and it's just been zigzagging the whole week. So that's what's beautiful about this. You could just play the differentials on the high side and on the low side, and just play the ranges and take advantage of it. So this has really been a case in point where you could have just bought, sold, and taken advantage of it on both sides. This is Fred Razak at CMTrading. I want to wish everybody a beautiful weekend. Thank you.